Hey, this is Roger Conrad, the editor of Utility Forecaster, Canadian Edge, and New World 3.0. What I want to talk to you about today is the market in general and where stocks stand, and particularly the kind of infrastructure and innovative stocks that we're following in New World at this point in time. Obviously, right now, we've made our way through most of fourth quarter earnings season. We're also seeing, I think, a resumption of bear market selling, where we have perhaps not quite the violence of the sell-offs that we had last fall, but certainly pretty relentless, selling every day, some intermittent periods of buying when bargain hunters come in and push prices up, but mainly a lot of downside, and it's pretty much across the board. I think what investors are trying to wrestle with right now is whether or not companies that have done well through the fourth quarter, that have low leverage, that have niches that are proving to be fairly recession resistant, in other words, in terms of sales, in terms of being able to operate healthily as businesses, they're remaining profitable. And to see, investors are wrestling with, companies that have come through the fourth quarter in good form, if they're able to continue, given some of the larger news coming down the pike. Of course, we've had a tremendous, I think, deflation of confidence in the stimulus package, which everybody was very excited about not so long ago. And now, of course, people have been pointing out some of the holes in it. Maybe it won't be that stimulative to the economy. Maybe the banking rescue efforts will go amiss. And so, in other words, all the emotion that was positive and was really, setting off against some of the negative news on the economic front is now kind of shifted the other way. So now we have, quite a bit of gloom in the market. And again, I think that's been behind the selling. So, and the question is can a company that's been doing well continue to do well given that kind of backdrop? And I think, the jury's out on a lot of these issues, and we really have to, that's why we have to continue to look at numbers. But we can look at the earnings numbers from the fourth quarter for a number of companies, look at the earnings guidance that management's telling us, and make some pretty good inferences that at least a good handful of companies mixed across generally essential services, generally businesses that have very, very strong main customers, in other words, governments would be a good example of that, that they are able to hold up, that we will see them continue to hold up. And why does this matter? Well, of course, everything's selling off right now, and of course, the level of belief that stocks that are reporting good earnings can hold up and can continue to make it throughout the recession. The level of skepticism has risen pretty high, so everything's dropped. But market history does show us that if a company is able to hold its own with the stress test that accompany a bear market, in this case, credit problems, the recession, and so on. If it can make it through those, if it can continue to pay dividends, if it can continue to post healthy growth, then it's going to be the first target of investors when the market eventually cycles out of what it's going through. And one thing a lot of people lose sight of is that even in the middle of the Great Depression, so if you're a believer that we're really heading back into that worst of all debacles, you can still take a look and see some definite periods during that period where stocks really took off, where you had tremendous rallies, and the money was going into, again, those companies that that were making it through the crisis. So, of course, my belief is that we will see eventually all this money that's going through go to work and get things going again. And I think when that does happen, again, these are the companies that are going to lead the way. I don't know of a single administration that's come in hasn't had some stumbles, at least in its early days. I think people had some very unrealistic assumptions of what this administration might be able to accomplish very quickly. And I do think if you look at their record, it has accomplished quite a few things. But again, the level of expectation is very high, the inevitable stumbles, and there again, people have lost faith that $3 trillion inflow plus basically 0% interest rates can do anything. And again, I think odds favor something really big happening here. I think, in fact, if you want to look out far enough, the problem will probably be more inflation. But I do think what we want to do, at this point at least, stick with our stocks, our companies that are working, that are making money, that did well in the fourth quarter, that have pointed to strong 2009s going forward. And you know, sticking with those companies, I think we'll continue to hold our own in this bad market, and we're going to be at the forefront when things begin to cycle out. So that's all I have today, and I'll talk to you next week.